Hello and welcome to another ACY Securities market tutorial. My name is Alistair Schultz and I'm going to be your host through today's trading journey. Now in today's topics I'm looking at the basics of charting and not so much what might be happening in the charting techniques, but more about what type of charts are available to you and what some of the information is that they can give you. Now originally charting has started a long time ago for a variety of different reasons, but for us, when we're trading financial markets, it used to be a fact that you'd have to get graph paper, mark out your close price each day, and you would link the dots together to create a line chart. So, coincidentally, the first chart we're going to be having a look at since the digital era has come beyond us is going to be about line charts. Now, these are some of the charts that are available to you, and you will have likely seen these pictures before. They are simply just the buttons that I've re-illustrated for us to have a look at, and they will come on most platforms for trading today. You can find them very commonplace in MT4 and MT5 as standard functions, and a variety of other platforms will also offer you these same buttons to use. So all they will do is change the way that the data is represented graphically. So the first one we're going to be going through is the line chart. From there we're going to be having a look at Japanese candlesticks, and then from there we're going to be having a look at bar charts. Now there are other ways to look at charts. These are generally the three standard ones that you will get on pretty much every platform that you can trade, and the others will usually be an add-on or a custom that you will have to get built into it along the way as well. But I will have a look at those, but just very briefly and towards the end of this video. So if you want to skip ahead, feel free to do so to see what I'm talking about on the other types of charting that you can. Now, the first thing to sort of take note is, what do we actually see on a chart? It is simply an X and Y axis that we usually would see, and the Y axis is usually price, while the X axis is usually time. Sometimes time is replaced by volume, meaning the amount of trades that go through in a singular moment. So depending on what your broker allows and what sort of volumes you're able to get data of, this will likely impact on what the chart might look like. But for the standard functionality, you won't tend to see that. That will be on other types of charting that we'll cover a little bit later. So the first thing to sort of have a look at here is the line chart. Now line charts are very basic. They are a continuous single line. They really only give you the prices for the close price of the day. They don't give you the open, they don't give you the high, and they don't give you the low. And this was originally how trading was really conducted. Way before electronic trading, when it was paper trading, you would actually see people marking out their charts, putting a dot each day, and then linking up the line to create the same effect. Now that we've got electronic trading, naturally we have a little bit more advantages, and we can also get access to a hell of a lot more data. The advantage though of a line chart is that it is very simple. It is easy to understand. You would usually be using it on daily prices where you don't want to have anywhere as much noise, and they tend to reduce the implications of having paralysis by analysis. Now if you've never heard that term, it's simply the idea that you have too much information coming in and it makes you have confusing or conflicting ideas about where price might be going. So if you do suffer from that, then maybe having a look at your line charts might be a good idea. You can still see patterns in price on your line charts. You just tend to find that it is more the grouping idea as opposed to a singular price movement next to another. So in this instance, what you would generally find is that on your line charts, you will likely see still be able to see triple tops, double tops, head and shoulder patterns, all of those sort of things for those technical analysts out there that might find this a little bit easier for them to use. Now, the next type of chart we're going to be having a look at is the Japanese candlestick. And this was actually obviously used in Japan a very long time ago, and the early adopters of it here in the modern world, especially in the Western world, is generally be accepted that Steve Nissen brought it across. So if you do want to read up on your candlestick reading techniques, then feel free to go and check out Steve Nissen's books. They are a little bit dry, but they do have some really good information in them. Now, what is it that we see about Japanese candlesticks? Well, originally they were used to actually trade rice in Japan a very long time ago. But nowadays we can obviously use them to access more information when it comes to our stocks, our futures, our commodities, whatever financial market you might be looking at, you can generally get a candlestick driven chart behind it. Now, the advantages of these are that you do see a little bit more. It gives you a little bit more information than what you would expect with a line chart. As opposed to just the close price, we get a variety of other functions. We get the wick indicating our highs and our lows of the time period. We then have the body, which signifies our close and open prices. And I've got these little diagrams here behind you to sort of give a bit of a better idea. Now, usually if you were to color these, you would usually have sort of a red color for a downwards move and a green color for an upwards, but the colors really don't matter. The information is the same. You could have all the candlesticks working together in the exact same color and still be able to get the same sort of information. However, changing the colors of them does make it a little bit easier to move forward. Now, one interesting piece of information that comes with Japanese candlesticks is it allows you to actually look at the intricacies of price in the immediate moment a little bit simpler. So you can actually look at these different prices, compare the candlestick from one to another, and get an idea of what's going on. In a line chart, you don't have the ability to do as much pattern recognition. So that does give you a little bit less information on the line chart side that you do see in the Japanese candlestick side of things. So if you are into your technical analysis, you are into your pattern recognition, and you are quite comfortable with the idea of trading on shorter term bases, then Japanese candlesticks are probably a little bit more inclined for you to use. Now, the next piece of data that we're going to have a look at almost has the exact same information as a candlestick. It just means it's bunched up a little bit more, and sometimes you can't change the colors of things as easily. So the next one that we're going to have a look at is the bar chart. It quite simply gives the exact same information that you would expect as a candlestick. However, the graphical representation of it is literally just a bar. So you don't actually get the full body sort of situation going on. You can't change the color to have red ones going down or green ones going up. It is a little bit more compressed, and you would usually have a look at this sort of pattern or these sort of charts if you were doing stuff on an automated spectrum, because it would mean that you can compress a hell of a lot more data into your back testing or perhaps into your automated side of things if that's how you trade. Naturally, almost all charting things are really more relevant for technical traders, but it is still very important for fundamental traders to actually know what they're looking at. And so even having just a basic level of understanding in some of these charts is going to be important, especially if you're not into the customized side of things or developing your own sort of charting techniques. So either way, keep an eye on what's happening. In terms of the data that we can actually get, there are some other types that we can look at. The other types of charts that you might consider would be tick charts. You then would have range bars, you would have Renkos, or even Heikin-Ashi candles. Now, the difference between these are that they do have a very different level of reading. Instead of on that X and Y axis being about price and time, the time variable becomes different. So you might have it being a case of in tick charts where it's in activity based. It will only move when there is activity for it to do so. When we have a look at the Renko bars or the Heikin-Ashis, it's the same sort of thing. It's based on the amount of volume that is there in the market at the time. And so you will find that you might have it move in a particular direction much faster, very quickly, and then you might not get any movement for an extensive period of time. Now, why is it different on the data side to read? Well, from one thing, having time gives us a gauge of when we're going to actually be looking for price changes. Whereas in this sort of a market, then when you're using a range or Renkos or Heikin-Ashis, then it changes how you look at it. You might find yourself actually looking at more than one chart at a given time. You tend to find that automated strategies do work quite well on the other types of charts, and you can put a cap or a limit on where you're seeing things go. So if you are someone who might be looking for particular retracement ideas, then range bound sort of or range bars might be useful, because you can cap or limit how many pips or whatever the price percentage you want them to be that they move down before a new bar starts again. So these sort of charts become a lot more customizable to fit your trading parameters at the given moment. If you want them to be something entirely different to what you would normally see on a time-based scale chart, then that will give you a very different opportunity, and it might open up the door for a few different ways for you to have a think about your trading. Now, there are some other parts of this that you will find. There are so many charts available to us to have a look at that it really does start to get hard to understand which one you might want to look at. My suggestion is to have a look at all of them and find the one that works best for you. Almost all charts will have some sort of variance on what they're measuring, but generally it'll be the open, the high, the low, the close, or the volume. They will almost always have all of that, and then you'll have time and date as one of the main independent variables that usually stays around. So depending on your chart, have a go at different ways of trading them. Perhaps you want to swap a technique that you're currently using to a different type of chart, and you will see that maybe it gives you better results, or perhaps worse. Have a look, have a fiddle, have a bit of fun with it, and see what works better for you. That's really all I've got for you today on this. I am looking at redoing some of our videos that we've done earlier on when we do get out of lockdown. So we will have some higher quality stuff coming for you, but I do want to keep the tutorials coming for you. So keep an eye out for them as they go along. Of course, if you want to get in contact with me about any of the information I've covered today, feel free to shoot me an email at talktoal@acy.com. And don't forget to like and subscribe so you can get more great content from me and ACY Securities in the future. Have a great trading day ahead.